Hey everybody, Economic Ninja here. I hope you're doing well. Well, the data has come in. Today it is official. Consumer prices rose 8.5% in March, slightly hotter than expected and the highest since 1981. Listen, everybody, we have been talking about this for well over a year, how inflation was going to start to ramp up starting this last fall, and it was going to get worse and worse. And I believe personally, not financial advice or trading advice, the Economic Ninja says that inflation will be worse than the 1980s, early 1980s, late 1970s. The reason why primarily is, well, there's two reasons. A massive amount of money has been created since then. Massive, 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 okay? Another thing is that we have never seen in the last 100 years a tragedy like we have been going through, quite frankly. Whichever side you're on, let's say the tragedy is the shutting down of the economy, all right? Let alone, what's going on with the actual pandemic, the flu, and people being sick and passing away. The shutting down of the economy sent shockwaves through the world's financial system, and it is going to get worse. I don't want to, sugarcoat this, and for anybody that says this is FUD is a complete idiot, okay? A complete moron, and I can't say that more seriously, all right? If you don't see the writing on the wall, well then, I guess... and you're not willing to actually sit down and listen and open these up and shut this, well then I guess at this point you don't have a whole lot of help. So okay guys, we're gonna dive in. Sorry I digress, but this is really what's going on. Here we go. Key points. Headline CPI, which is the cost price index, in March rose 8.5% from a year ago. The fastest annual gain since December of 1981, and 1/10 of 1 percentage point above the estimate. I want to explain to you that in December of 1981 is when we were coming over the top of this inflationary wave from the late 70s, okay? That was a multi-year inflationary wave that really started in the early to mid 70s and blew off around between 1981 and 1982, okay? So right now, what you believe, or what we believe right now, is just the beginning of this inflationary event is akin to the end of the inflationary event, the blow off top, back then, okay? So that's something I really want people to understand. All right, next we have surging food and energy. Surging food, energy, and shelter costs helped account for the gain. Obviously, we've seen food inflation like crazy, energy prices have been exploding, and the cost of homes, both rent and buying homes, just seems to go up. But I want people to understand this too. That won't last forever. There is a point when you will stop trying to buy homes and people will just stop paying rent. If the landlord tries to raise the rent, they're just gonna say, sorry, none of the money, because our wages are not going up fast enough. And if they did, that can also only last a certain time, that sort of spiral up as costs go up, and then companies have to pay people more. Because what happens, once again, as companies pay people more, their margins shrink, and again, people at certain points will not buy their food. You will not buy a gallon of milk for $100 because you simply don't have the money, okay? Just making that very, very clear. There is an end in sight. It says real workers' earnings fell by another 0.8% during the month as costs of living outpaced otherwise strong pay gains. So again, this is just making my point that I just made. Wages are not only keeping up, sometimes they are falling, okay, in comparison to the inflation rate. So there is going to be an end to this. So it says right now that, the CPI went up 8.5% from a year ago on an unadjusted basis, above even the already elevated Dow Jones estimate of 8.4. So right now, what this is telling you is that not even Wall Street can grasp how bad of a situation this is. So when you consider your stocks, your portfolios and stuff, you really need to think about, where do these fund managers, economists and all of them think they're going, and are they right or wrong? Because even the Dow Jones estimate was off, okay? It was light, and that was supposed to be, no way that could happen, 8.4, and then it went, Dow Jones, hold my beer, watch this, and just boom, knocked it up a notch. It said, excluding food and energy, the CPI increased 6.5% in line with the expectation. We don't care about your stupid expectation. The CPI is stupid. Why is the CPI stupid? And I'm not referring to you guys, NinjaNation. I'm referring to whoever, said that, seriously, excluding food and energy, the CPI increased 6.5% in line. because they're idiots. We don't care about all that other stuff. We care about food and energy. That is actually what makes the world go round. We need food in our bellies, and we need lights to turn on when we want them on, okay? The data reflected price rises not seen in the U.S. since the stagflation days of the late 1970s and early 80s. Well, no duh. March's headline reading, in fact, was the highest since December of 1981. The core inflation was the hottest since August of 1982. Again, guys, 1982 was that key year when everything started to come down because of actions that the Federal Reserve did back then. But guess what? The Federal Reserve cannot do that now because they would completely collapse the economy, totally annihilate it. So it seems like there's only one direction right now that we're going to go, and that's going to be high inflation and transitory hyperinflation. Now it says, however, the core inflation appeared to be ebbing, rising only 0.3% for the month, less than the 5% estimate. But again, we don't care about that because we care about food, fuel, and energy. I mean, that's really what it comes down to. And I know fuel is energy, but I mean, just the price of electricity is going up everywhere, it seems, too. Now, here's the catcher. The big news in the March report was that the core price pressures finally appear to be moderating. You gotta love this. Wrote Andrew Hunter. Man, Andrew, did you want to make a name for yourself, or you're about to make a name for yourself for being wrong? Senior U.S. economist at Capital Economics. Hunter said, now get this, he thinks the March increase will mark the peak for inflation. Hey, can you guys do me a favor in the comment section? Hashtag peak inflation, haha. That'd be sweet, because I'm going to tell you right now, just my personal opinion, not financial advice, we are not out of the woods. So, Andrew Hunter says this increase will mark the peak for inflation as year-over-year comparisons drive the numbers lower and energy prices subside. You know, it's interesting. I did a video about, I don't know, 2 weeks ago, 3 weeks ago. I said expect oil to drop, right? You're gonna have sort of a little blow off top. It's gonna drop. Everything's gonna seem fine, and then get ready because we're gonna start heading up again. So just remember that the Economic Ninja said that, okay? Don't trade on that advice, but just say it right now. I do not believe that we have seen the end of very high oil prices, all right? We are yet just simply one more geopolitical threat away from seeing this spike again. So still, due to the surge in inflation, real earnings, despite rising 5.6% from a year ago, weren't keeping pace with the cost of living. No duh. Sorry, that wasn't in the house me. Real average hourly earnings posted a seasonally adjusted 0.8% decline for the month, according to a separate Bureau of Labor Statistics report. It says the inability of wages to keep up with costs could add to inflation pressures. You know, it's almost like they're just repeating the exact same thing. They don't even have anything new to say because it's getting bad and it's going to get worse. The Atlanta Federal Reserve wage tracker for March indicated gains of another 6%, which is symptomatic of inflation pressures continuing to broaden. You know, let's just put this down. This is getting stupid. Point being is this. It's getting bad. It's bad. Things are getting worse. It's going to continue to get worse until we see, and I'm gonna put out a ninja prediction, okay? Not financial advice. We're gonna have a bubble pop. Is going to be bad, and the bubble pop is going to be a deflationary pop because people are caring more about feeding themselves and putting fuel in their cars. Like I said back in last year, literally almost exactly a year ago, I said about that was going to start in the fall, in August to September, and we hit that one, right? What's going to happen is we're going to have a deflationary spiral because people are going to contract their spending aggressively, okay? It doesn't matter if there's not a lot of cars for sale. Those are going to stop too because people simply don't have the money to feed themselves and pay the rent, okay? So we're going to see all kinds of things, and it's going to start in travel and leisure. Now, the interesting thing, and I've talked about this before, is right now you have this boom in travel and leisure because countries are opening back up for travel. The weather at the exact same time has peaked. You know, we're in that beautiful time of the year, you know, all over the world where it's going from cold into warm, sunny days. So people naturally are used to going out. And I think what's happening is credit card debt is starting to explode, and they're saying, look, we need to get out and live. What's it worth going to work if I can't enjoy myself? So they're going out and spending money right now at a rapid pace. At the exact same time, countries are opening, places are getting easier to deal with, right? What's going to happen though, it's going to hit us really hard when we get those next few credit card bills coming into the summer with even a more accelerated inflation rate. We are going to see, I believe, by mid to end of summer, a rapid deflationary period where people stop spending and numbers start coming out for companies, and it starts to be really horrific, starting to worry Wall Street. And I start thinking into the fall, going into December, we start to see a deflationary crash in the stock market, because people see the writing on the wall. They start to accelerate their selling of stocks, including an amazingly stupid tax plan that's coming out of the White House right now. All right, guys, that being said, I should probably leave. It's been 10 minutes. I hope you guys had a great day. Hashtag peak inflation, haha, and we'll see what happens. All right, guys, that being said, the Economic Ninja is out.